Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up for this close of business on Tuesday, the 16th of May, 2017. And we're just before they're going to reset the boards behind me and get going for the 5 p.m. trading. So as you can see, a very mixed day. And, you know, we're in this, what I call this poster child effect of the NASDAQ, especially with the WannaCry virus. You know, how many tech companies are going to do well off of figuring out ways to make money off of that and preventing things like this. That's still getting a bid. The S&P's down on the day. The Dow just sort of nowhere. You're stuck at the 18-day average of closes in the Russell, and that's been the weak link. The dollar gets smashed, and why not? You know, every morning I wake up, it's like I'm just waiting to hear impeachment proceedings against President Trump have begun. I mean, it seems to be what the press wants. It seems to be what certain parties want. And I don't know how long our president can fight off even keeping his own Republicans there. I don't recall a time where every morning you wake up it's something about the White House that is negative. If he told the greatest piece of news in the world to Russia to get them on the side and wipe out ISIS with that piece of news, they would find a way to turn it back. We don't know what he did or didn't do, and I'm not his defending guy. But it's impacting the markets, and that's what we look at. The API numbers came out. They are not good. While you had 1.8 million draw on gasoline, distillates went up 1.8, and the decline that we're seeing is minimal. You know, you're getting a 500,000 barrel. It's nothing. So I'm concerned that we're still sitting here not getting the news that you need, and that's problematic. Weather is coming in, cooler weather, dry weather, so the corn market's seeing plantings go in, keeping the prices there down, and to a degree, some of that acreage the people were going to plant, maybe they won't plant it in beans, so that gets a little bit of a rally. The nat gas down hard off of ideas that, hey, we should be warm going into Memorial Day, and instead the 10-day forecast is a bit cool for parts of the Midwest and the West Coast, cooler than normal. What does that do? So the typical havoc, watch in June, you'll be 90 degrees and the weather game will change. So let's take a look, if we could, at these charts and get a feel. Let me turn the right way here. On the weekly chart, you can see how the market has come up here and run out of momentum against the 21,010 level. Now, on a closing basis of daily close, not weekly, you've gone from 20,335 to 2954, and you've gone sideways. That does not mean you can't break out to the upside. You certainly can. But it also doesn't mean that at some point here, in this whole thrust area, maybe we do get a break in the market. So what I've done is I've given you an idea, and I've connected these points in the chart there. They're identical, by the way. They're 21010. You just missed getting to it today at 20,995 to just give you an idea of what this market is dealing with. Now, some will say this could be also a head and shoulder formation. If you break out to the downside, watch out what that does. Blah, blah, blah. You'll hear all kinds of talk. Remember what I believe in chart formations most of the time. You look at them, and today I see a cloud that looks like my dog. Tomorrow I'm going to see whatever. That's what I hate about them. I like math. You know, it doesn't lie to you. But that's the resistance point you have here. In terms of math, you don't have a higher high and higher lows. You have a higher high and a lower low. Any way you want to cut it, you're not trending. If you define the trend as higher highs and higher lows, that's an uptrend, and lower highs and lower lows, plural again, as a downtrend, well, you don't have that. You got the higher high and the lower low. You got nothing right there. When I put this together, you can see, here's that resistance point I had earlier and the 18-day average of closes. Get over this number and stay over it, And I think that you'll hear the markets breaking out again, going on another leg to the upside. Get under 20,760 right now, and you'll hear that the market has made a peak, and it might go back to the 100-day moving average on a much-needed correction. I mean, I can almost hear the chorus in different ways. The Bollinger Band is going to fall again tomorrow. Now, right now, it's at 21,073. You can see it there. Day before is 21,099. If it were to just go sideways a bit more, it's probably in the 21,060 level, something in that area. And that's going to come into play eventually if we don't do something soon at this 21,010 level. It doesn't fall every day like a moving average, so don't think that's how it works. It's a different formula, but you can always get the idea of what it would do by looking at what prices are currently at. In the Dow slow stochastics, they are just going flat right here, and they are in an overbought territory. Any number over 70, even by this small amount, is overbought. That's how I consider it. Now, the number that is still overbought is the D line, which is the blue, and that means that will likely fall if you don't do something tomorrow, back down just enough to get the market out of being overbought. Now, that would assume a steady to lower close tomorrow. Zoom to the upside and it probably stays overbought. When you go to the NASDAQ, again, a different world. Higher lows, higher highs, embedded reading over the 18-day average. Why not go to 57.63? And there's the problem. How do you take the NASDAQ up, and that's what that chart's still pointing to, and the other markets just dying on the vein? It could happen, but it's rare that it'll go that way. In the S&P, you've got another one of these. You're coming into a resistance area. You're overbought in the market. I don't see anything there that makes any sense. And in the Russell, well, you had an inside day. So to get a buy signal, let's just stop with the negatives. To get a buy signal, you have to take out 1399. And let's get to the exact number. It's 1399.20. That was yesterday's high. If you do that, initially what will happen is the swing line will claim higher lows and a higher high with a possible projection of 1418.30. If you get up there and then you'd slip back down, if you took out today's lows, you'd look at 1374.60 to 1374.40. This market's right on a cusp. Very important. I don't know that it goes up, other indices go down. It's not what I'm claiming. Each market stands on its own. At this point, the bears are in control. The market's got lower highs, lower lows. If we look at this, you're no longer in oversold territory. You've corrected enough. So I think the bears will sell into that market, and then they might stop and reverse if it gets up there. So we'll see what they do. I just throw out what I think the trade might be doing here. In the VIX, we suddenly have a pattern of higher lows and higher highs. Uh-oh, that hasn't happened in a long time. Now, what the market's missing is the close over the 18-day average of closes, which would have given it upside bias. It's already got momentum up. So contra to all that talk, this market, if it gets over 1070, might get itself going to the 1185 zone, the 100-day average of closes. What about it turning bearish here? Well, to turn bearish, here's what it can do. I'll give you the what-ifs. Ideally, take out today's high. Don't take out 1123. Reverse back down through today's low, and that gives you the bear pattern again. So those are the what-ifs, and I think you always look to see the what-ifs. In the bond market, I'm kicking myself. This market, when it lost its embedded reading, gave traders a chance at covering on a couple of times. If you didn't take it, now you went to the 18-day average. You feel terrible because that's what it was supposed to do, and you sat there with your hand in your pocket. So it all started right here when you took out this day's high. That's why I've got the arrow so you can see it. And it's made its objective. It got to 152.3, the 18-day average 152.2. When we come to the dollar index, the market has a lower low and a higher high. Momentum down and oversold. Does it stay down? We've got a Fed that is still looking at nearly a 79% probability on the CME website page, the Fed Watch page, of a rate hike taking place in June. Yet this market is falling. Another thing with complacency, which ties back, I guess, to the VIX. With the complacency, if you looked at the yield on junk bonds, there's an index of them. Not each one trades obviously the same way. But overall, the index has gone from near double digit of 10% down to 6%. People are reaching for them with this, they're just saying, gee, I'll take on some of that junk debt to enhance my portfolio. I'm not getting the moves I want in the 30 and the 10-year. Where's the 2.6% plus that the Fed was talking about, and blah, blah. And that could create its own problem down the road. Just saying, there's a reason they're called junk bonds. In the euro currency, if you saw their trade surplus today, and I wrote about it, it's the biggest they've had since the currency, if I read it right, and I think I did, was created in 1999. So they've got big trade going on. Their currency is reversed from going down to up. This is exactly what President Trump wanted. Nobody would mention that. The dollar against the basket of currencies is falling as the president wanted. And we're not trending, but you're over the upper Bollinger Band. You're overbought. Market might be ahead of itself is my point. British pound actually threw out a buy signal today. It had an outside day up. What's my rule on an outside day? As long as this low for the next 2 days is not taken out, I think the bulls buy the market and protect on the breaks if they can get it. And the market, because you got narrow Bollinger Bands, ideally makes a run or tries to get up to that upper Bollinger Band. Doesn't mean it will. Doesn't mean you won't take out this low. If you take out this low, you have what I call a bull trap. And if that occurs, then the lower Bollinger Band becomes the objective. So interesting point on that chart. Japanese yen lost the embedded reading. When you lose the embedded reading, what's the rule? You're going to make a run for the nearest major moving average. In this case, it's the 88.85 out of the 100, not the 89.21. It can go there, don't get me wrong, but because the 100's right here, that's the test. What else? When you get under that 100-day average, I often tell you that the danger there is the first challenge often flips back. Look at your gold chart if you want proof as to what I argue there. In the crude oil market, I'm waiting to see how we reopen tonight, but I will not be surprised to see this market just hanging here now at the 48 level, scratching its head and saying we might as well wait and see if the EIA report in the morning confirms the API report that we really went nowhere between gasoline and distillates, one down 1/8, the other up 1/8, and not a big draw in crude. So we'll see what goes on through there. In gasoline, market's overbought, has reached up. It either gets up to this upper Bollinger Band right now, or I wouldn't be surprised that you're back at the 18-day average regrouping from all this. Last in the nat gas, the weather forecasts for the west and the center of the country are a bit cooler, and so the market pulled down into all this support. It would have to go through 314 to destroy the chart. It's no longer overbought. I think it's got to regroup right here, if anything. You'll notice I didn't put up today any of the ETFs. They'll be back tomorrow. Our vendor's doing some work on them, and there was nothing I could do. On the chart of the day, our features, price counts, they are so important. Sugar coming alive with some counts. Maybe you get up a little bit from here, but you got to read the report that they put out. Then you've got the corn counts that are still very much alive. What about gold? Believe it or not, I had a meeting this morning on gold. Wanted to know what it was saying. It has still got an upside count that has not been met. We'll see if the market can get there. And what about stock indices? You know, they're getting this type of action. I showed it to you just now in the Dow. What if the market breaks out to the downside instead of taking out that top? Well, what price counts do is they give you an idea, if the market breaks out, where might it go? To get this and the PDFs that explain how it all works, call us. Go to our website. You'll see a carousel of free offers. Choose any of them, and everything comes up on the form. You can click right up here if you're watching me on YouTube, and under me on a number of the different websites. It'll say, click here for Ira's free offers. Click it. I'm Ira Epstein. You have a good day. I'll see you all tomorrow.